Hi there. Welcome to the closing bell on the 8th of December for me. And today I'm just not going to keep talking about the stock market going nowhere. I'm sick to death of it. I can't wait for this year to end. As I'm sure you know, it's been such a difficult year trying to make any money in this market. Really has been tough. So we're just looking now for opportunity. Where should we be focusing our attention as these bond yields start rallying? Because really that's the only place I can find anything worth considering. There's no easy money out there. There's no signs that everything's going to all of a sudden go ballistic to the upside very soon. US markets certainly looking like a Santa rally is on, which can have legs for a while. So I'm allowing that to play out. But as far as real solid opportunities for investing right now, really you've got to be focusing in on the bond yields falling away. And if you back that idea and want to look for opportunities in that sort of space that's going to be affected by that, that may be where a few gems could be hiding at the moment. So for me, I'm really looking at things like property, some utilities, high yielding things, seeing whether there's any signals there. And there is a bunch of stocks I'm going to show you today, but I'm not going to tell you which one because I may send out something to members. So I'm not going to give you fundamental backdrop, which one is going to be the best, but I'll give you a whole swag of companies that you could have a look at and consider. So this being the US 10-year bonds, and over the last few weeks I've been saying, watch out, it could really start accelerating to the downside, the bond yield, and we are seeing that. There's a lot of strong buying coming into the market now in those 10-year bonds. Now, the big question, of course, is do we then get bad news and it starts spiking higher again? That's why I've put my lines in the sand above the high of the whole move over the last few months. So, if the US 10-year bond yields spike above 5% and, hold above there, look, it switches off for me. That feeling that the cycle is starting to turn down, that we're sort of at the early stages of a bull market in these bonds. And but apart from that, I think it is all the signs are there that this could surprise to the downside with these yields. So thinking about what you need to do if you do want to act is something to be starting to consider. So if I'm looking at some of these property stocks, you'll see that there's been some pretty serious downside happening in some of these stocks. And I'm looking and thinking whether these reversals might be an early opportunity to get in soon after that crash in prices has occurred. So I'll just take you through a few of these. We've got Growth Point Properties, GOZ, just noticing, very long term, this is rally over the last decade. We had the crash in 2020 and then the recovery. And then we've had the inflation rates flying higher and commercial property also under pressure with vacancy rates post COVID, of course. So some big issues underlying there. So you're going to have to drill down into these to work out which ones have the right exposure and maybe providing good value. But just wanted to show you a bunch of these stocks showing signs of life after being absolutely creamed. And this is due to interest rates starting to turn. So you can see monthly buy pivot there after a false break of a major low, and also right down in a buy zone of a major wave as well. And just going through a few of these, we've got Charter Hall Group, interesting chart looking at this one, very long-term, strong uptrend that we've had. And you can also see, very clear wave structure. If I was just look at the last few waves, this wave structure here, and I'm looking for these areas. If I'm looking at the waves and thinking about these huge retracements that occur, looking at the buy zone of those waves, looking for reversals, and I can't give you more information than that. But just ticking a few boxes, the fact that we've got a very strong long-term trend, and we've just had a really sharp correction, $22 back to under 10, $9, and signs of a reversal, still in long-term downtrend. So an aggressive entry point. And I'm not going to give you the stop loss levels, that sort of thing. That's kept for members, and also whether I'd even want to buy it is kept for members. So I'm just showing you a bunch of these stocks that may be on the verge of some sort of recovery. Charter Hall, Long WALE REIT, they've got really great tenants, really long leases on government and very large your Woolies, Coles, sort of Bunnings type properties with long leases. So really solid, but they have been pretty hammered. Lots of debt. This is the sort of thing, these property groups functioning with lots of debt. Were hit really hard. But as that situation changes, as property starts bouncing back and rates start falling, their margins can improve. So out of being in a really tight spot, and all of a sudden can bounce back. So looking at this one, I'm really looking at the whole low from listing, right? So major level, and it's bounced off there once in 2020, and look at that. That's a pretty serious clear out. Looking for a possible false break of that level. Monthly buy pivot there. Is this thing going to have at least a bounce back that will sort of give you the chance to take part profit and turn it into a free call option, which would really be the plan. Same, Unibanco, Rodamco has had a long, arduous journey here, but I'm just interested in looking at that whole wave down on that structure, going down. That's that buy zone of that whole wave, and it's been a really long time coming. It's been a few years of just not being able to turn up, and here we are, a potential long-term trend shift, getting strong there last month and sort of breaking out of this descending wedge pattern. Is it going to have a bit of a bounce back after all that work done? So that one's looking interesting, I guess. We've got National Storage REIT. That's been holding in there pretty well compared to the rest. And so maybe, if you're buying strength, you're looking at something like this over the other ones that have been really hammered. This one only pulled back to the point of control of the last wave from 2020 up to 2022. So, it's still done a lot of work, but has held in there pretty well compared to others. Possible monthly buy pivot this month. Does that start trending higher as rates fall? Also, GPT, similar sort of situation where you're looking at these sort of long-term structures. It's had a really serious bashing down into 2020. You can see there, going from 650 down to 3. Where did the rally go to? No surprises there. Going to the sell zone of that wave, and here we are down in the buy zone of that wave. We've had one retest of that point of control already, and here's a second. So a nice second clear out. I often like the second buy signal is often stronger. So that one looking interesting for an attempted recovery in price. Also looking at Transurban. I've always wanted to get on this one, and it's been difficult. It's had a period of consolidation. Again, it's a similar story of that 2020 scare being a major focus. And looking in close at this one, looking at how it's trading since that 2020 crash, and pretty clear that sell zone constantly causing trouble, and just recently didn't even quite get down to that buy zone area. So it has been behaving quite strong. It's always very difficult to get on this one. So we've had another false break, I guess, of that major support there. Little monthly buy pivot there. So if interest rates are going to calm down, is this thing going to start heading back up again? Also, APA Group, another one trying to change their business from being totally sort of gas pipeline focused, trying to look towards renewables and off-grid sort of stuff. So, there is a pathway for them to change their model and keep growing. And, very strong chart, this one, of course, but it has had a lot of work done over the last sort of period of 8 years. And it's just coming back to a spot where you're seeing good buying pressure. So, you're looking at those waves back to the buy zone, wave, buy zone, another wave. So we're constantly finding that buying support, I guess, where you'd expect it, and running to the upside again. So we've got another monthly buy pivot just coming in there. Is that a good aggressive entry point into this one if you think rates are coming off the boil? So that's just a few stocks to show you there that are showing signs of life, that are giving signs of a momentum shift with a monthly buy pivot from pretty major levels, giving a hint, I guess, maybe it is time to look at those beaten up stocks if you do believe that the high for this interest rate cycle is in, and that it's time to be a bit more aggressive on the buy side in those things. All right, I think that's enough. I'll come back with more next week.